Welcome back to the podcast, everyone. Episode 319, and oh man, do we have a doozy for you today. We're diving deep into the world of GPUs, and specifically, one company that is just taking over.
That's right, Mark. If you've been following tech news, you know exactly who we're talking about. NVIDIA. The numbers we're seeing from Q2 2025 are just eye-popping. They've captured a market share that feels almost, dystopian.
Dystopian is a good word for it, actually, Jenny. We're talking 94% of the discrete asterisk GPU market. 94%. AMD is at a measly 6%. And Intel? They're basically a rounding error. Less than 1%.
Less than 1% for Intel, who actually launched their Arc GPUs before NVIDIA's latest generation, remember? It's just wild to think about. And this wasn't even a slow quarter for the GPU market at large either, was it? It makes you wonder, how did they pull that off?
Not at all, Jenny. That's the other layer to this. Q2 is typically a down quarter for GPUs. People aren't rushing out to buy new cards after the holiday season, you know? The 10-year seasonal average for Q2 is actually a decline of about 5.2%. But this year, the market grew 27% from Q1 to Q2, hitting 11.6 million units shipped. That's 5.7% times the 10-year seasonal average. It's completely upside down.
So how did this even happen, Mark? You mentioned dystopian earlier, but the research points to another crucial factor. Panic buying. Can you, really break that down for us? Because it sounds a bit wild.
Oh, this is the interesting part, or maybe the slightly unsettling part, depending on your perspective. So leading up to Q2 2025, there was a lot of buzz, a lot of uncertainty around potential U.S. government trade tariffs on semiconductors, particularly from China. Some analysts were projecting these tariffs could add 25% to 50% to the price of GPUs. Now imagine you're a gamer or a professional or even a crypto enthusiast, and you're thinking about upgrading your setup. You hear these rumors, you see these projections. What are you going to do?
You rush out and buy before the prices skyrocket, right? It's that classic FOMO, fear of missing out, but on a massive, market-distorting scale. It's like seeing a going out of business sale, but for, the entire tech industry.
Exactly. John Petty Research, who conducted this report, explicitly called it pre-tariff panic buying. Consumers flooded the market, trying to get ahead of these anticipated price hikes. And NVIDIA, to their credit, or perhaps their strategic brilliance, weaponized this uncertainty.
Weaponized it? Wow. That's a strong word. How did they, do that?
Well, they timed the release of their new RTX 50 series GPUs in Q1 2025, just as this tariff talk was heating up. Then they kept releasing value models in Q2. They managed their supply chain to optimize for this rush, like a well-oiled machine. We even saw AIB prices add in board partners. These are companies like Asus or MSI that make the actual GPU cards. They actually dropped prices for mid-range and entry-level cards to clear inventory during this frenzy. But at the same time, high-end AIB prices actually increased because demand was just soaring. It was a perfect storm, and NVIDIA was ready.
So NVIDIA played this perfectly. But it feels a bit exploitative, doesn't it? To leverage consumer fear like that, even if it's market forces at play. It's are they being smart or a little, ruthless?
It's definitely a gray area, Jenny, and Dr. John Petty himself said, "The upheaval and uncertainty over tariffs have not abated, making planning difficult or impossible for PC suppliers. Consumers are equally confused and worried, which will likely result in a pullback, further exacerbating the market." So he acknowledges the market distortion. But on the other hand, you could argue NVIDIA simply adapted faster and better than anyone else. It's a fine line between capitalizing on a situation and, creating one.
And what about that 154% attach rate? That means 1.54 GPUs were sold for every CPU. That's a lot of upgrades, not just new system builds, right? It's like everyone decided their old GPU just wasn't cutting it anymore.
That's right. It signals a huge wave of people upgrading their existing systems. And a lot of that, Jenny, ties into this community insight we found from Reddit. People who upgraded during the pandemic era with, say, an RTX 2000 or 3000 series card suddenly saw the new RTX 5070 cards coming out, offering potentially twice the performance for around $500. They heard about the tariffs, saw the performance uplift, and thought, this is my chance. I need to get one now.
So even if there are criticisms of NVIDIA's tactics or quality issues some users complain about, the raw performance advantage and the tariff timing created this perfect storm for them. It's like all the pieces just fell into place in NVIDIA's favor.
Yes, but there's a flip side to this growth too. JPR's forecast shows a projected decline in the GPU market from 2025 to 2028, with a compound annual growth rate of -2.9%. This panic acquisition was effective, sure, but it's not a sustainable growth strategy, obviously. It's like borrowing from the future.
-2.9% CAGR for the overall GPU market, even with NVIDIA's apparent dominance? That sounds like a ticking time bomb for competitors, but how will NVIDIA avoid it? Are they just, immune to market downturns?
Well, that brings us to what I think is the true time secret to NVIDIA's long-term success. Beyond just Q2's tariff-driven surge, their ecosystem lock-in. Specifically, CUDA. For those not familiar, CUDA is NVIDIA's proprietary parallel computing platform. It's the software framework that developers use to program NVIDIA GPUs for things like AI, scientific computing, data centers, basically everything that isn't just gaming. It's their secret sauce.
And the numbers here are insane. 97% of AI developers still use CUDA. Alternatives like AMD's ROCm or Intel's OneAPI have less than 15% adoption combined. That's not just a lead mark, that's a chasm of trem. It's like trying to cross the Grand Canyon on a unicycle.
A chasm the size of the Grand Canyon, indeed. It frankly creates an ecosystem prison. If you're a developer, especially in AI, your code is written for CUDA. Switching to AMD or Intel would mean rewriting huge portions of your code. It's incredibly costly, time-consuming, and frankly, risky. So even if AMD or Intel release a physically faster chip, developers aren't going to jump ship easily. It's too entrenched.
So NVIDIA owns the AI infrastructure. They own the developer mindshare, which gives them this incredible moat against competitors. It means they can charge premium prices, which our research shows is about a 35% premium over AMD equivalents, and still maintain market dominance. It's like they've built a walled garden, and everyone wants to be inside it.
Exactly. This is why their data center and AI segments are growing so rapidly. The gaming market might shrink, as JPR predicts. But NVIDIA's AI fortress is where their real long-term growth is coming from. While gamers might eventually dwindle, AI GPUs are their billion-dollar life raft, pulling them through any future market contraction. They've diversified their bets.
And that neatly explains why AMD and Intel are struggling so much. AMD's RDNA 4 was delayed. They missed the tariff window. Intel's Arc GPUs launched with flaky drivers that just weren't ready, and they ended up with barely any market share even after launching first. It's like they brought a knife to a panic-buying gunfight, and NVIDIA had, a tactical nuke.
That's a perfect analogy. Intel had value pricing, but the drivers just killed adoption. It's like buying a sports car with square wheels, and AMD, for all their efforts with ROCm, can't overcome that CUDA ecosystem lock-in. Their market share actually dropped 2.4% from Q1, while NVIDIA's went up by 2.1%. It's a tough spot to be in.
It's a stark comparison, for sure. And even though we're talking about a future market decline in some areas, NVIDIA still seems poised to weather that storm. Largely thanks to its strategic pivot to AI and data centers. They've found their niche, and it's a deep one.
Absolutely. While the Q2 2025 surge was largely an anomaly driven by tariff fears, it highlighted NVIDIA's agility and market power. But the underlying strength is their unwavering dominance in software ecosystems. That's the real secret. They don't just sell hardware. They sell an entire development platform that's become indispensable for modern computing, like the operating system for AI.
So for listeners wondering if NVIDIA's win streak is a time bomb, it seems it is for everyone else, but not for NVIDIA themselves. They've built a different kind of business around their GPUs. This was a deeper dive than I expected, Mark. and pretty illuminating. It kinda makes you think differently about market power, doesn't it?
It sure does, Jenny. It's what we do. It's been a ride unpacking this NVIDIA story. Thanks for joining me, Jenny, and thank you all for listening to episode 319. We'll catch you next time.
See you then.